Ed Yardeni is still bullish on stocks overall with a 7,700 price target next year. And he joins us now. He is, of course, the president of Ed Yardeni Research. Ed, Happy New Year. Thanks for coming on.
Thank you.
Are you negative on the Mag 7 or just think there are better opportunities elsewhere?
I have a little bit of AI fatigue. I don't know about you, but it's been kind of wearing to be in this AI battles on a daily basis to try to figure out who the winner is going to be, to figure out if all this capital spending is going to pay off. And I think that's going to spread to other investors. I think it already has. And we may see that maybe the valuation multiples on some of these AI trades start to come off. Doesn't mean that technology is finished for the year ahead. As you said, semiconductors are doing quite well, and there's still going to be a lot of demand for semiconductors. But I would put more money in financials, which we've been overweighting. We'd put more money in industrials, which we've also been overweighting. And healthcare, we haven't talked about at all. And we think that might be a sector that does reasonably well this year, especially biotech.
Yeah, you know what? I don't tell anybody, but I also have a little AI fatigue. And being here at the NASDAQ, Ed, is appropriate because I was here back in 1999 before half our audience was probably even born. And we were talking about all the capital spending that was going into the guts, the infrastructure part of the internet, the global crossings of the world. I'm not saying this is going to end like that, but I think to your point, the spending in one group of companies can only last so long before you have to look somewhere else.
Correct. And again, I think what really has changed over the past 6 months or so, maybe ever since Michael Burry pointed out that maybe there's some known unknowns when it comes to the AI trade, I think there's a lot of uncertainty there. And I'm not sure that these stocks merit this kind of valuation multiple. Maybe Google does right now. I happen to own some personally, so I have to disclose that. But that could change tomorrow, or not tomorrow, but next week it could change if some other company comes up with a new thing that's a better chip, that's cooler, doesn't require as much energy. And there's so much money being spent in this area that innovation is occurring at the speed of light.
Yeah, I'm going to use a dirty word, utilities. And I don't mean like power utilities, because those have been largely red hot. But when you look at an Apple maybe and some of these big tech AI names, I do wonder how much growth might be left in them. They're massive cash flow generators, which is why I said the word utility, Ed. But I think to your point, there are faster companies and sectors where you can get the earnings growth that will drive the multiple, that will drive the returns. Where are those? You mentioned healthcare.
Financials, industrials. I think materials, the precious metals obviously have been doing very well and may very well continue that way, simply because we're looking at a year where monetary and fiscal policies are going to be a very stimulative tag team. Monetary policy has been easing since 2024. They've been lowering interest rates. The bond market hasn't cooperated. Bond yields have stayed elevated, but still the Fed now is doing another version of quantitative easing, at least through the middle of the year, or at least until tax season. And in tax season, there's going to be bigger than usual refunds because the big, beautiful bill was made retroactive to the beginning of 2025. So there's going to be a lot of stimulus coming at the economy. So the economy should be fine. I kind of wonder whether the bond vigilantes are going to act up and say, they don't really like this stimulative combination of fiscal and monetary policy.